OPEC is looking for market share while playing the long game. This is a critical story when you sit back and take a look at. Everybody's asking whether or not OPEC can actually make the additional product increases that OPEC Plus has been allowing. Overall, OPEC production rose by 220,000 barrels per day in June, driven primarily by the increases of Saudi Arabia, 173,000 barrels per day, and the UAE by 83,000 barrels per day. Looking at the rest of the year forecast, the IEA projects global oil supply to rise by 1.8 million barrels per day to 1.49 million barrels per day with non-OPEC producers. Now, Michael, this is the same IEA that the Secretary Wright has threatened to get out of and stop funding 20 to 30%, whatever our number is that we fund of their agency, because they do not support real numbers. They support all leaning to the renewable side.
No, I'm absolutely with Secretary Wright on the fact that we need to get out of the IEA or at least stop funding it from our standpoint. I do think OPEC, as you mentioned in this article, is struggling to figure out where they fit in this like long game approach. I will disagree with the headline of this article, though, is I don't believe this is a market share issue. I believe this is attempting to, one, in the short term, bring their countries like Kazakhstan, Iraq, countries that are overproducing relative to where the caps are, bring them in line. We all know how oil prices work. When supply outstrips demand, well, guess what? Prices go down. When demand is higher than supply, prices go up. So what they're doing is attempting, in my opinion, to increase supply in order to decrease prices, and therefore punishing that next marginal barrel that, their other OPEC brethren are producing. Now, I think from a long game standpoint, I think what they're trying to do is establish. So on one breath, you say lower prices brings in less marginal revenue for the next barrel. But I say marginal next barrel because if you produce 5 more barrels than you did yesterday, even at lower prices, you still make more money than you did yesterday. So increasing and bringing back barrels onto the market does increase revenues at the top line level. And we know this. OPEC is in Saudi Arabia. When you think of OPEC, really think of Saudi and then think of everybody else. So from Saudi's perspective, their budget is 90 to 95% wrapped up in oil and gas. I'm not a big fan of talking about, they need $120 oil to balance their budget. Let's just look at it from their economy standpoint. Their economy is 90 to 95% wrapped up in oil and gas. That's never good from a portfolio allocation. We work in the oil and gas business, Stu, and we don't even have all of our investments in oil and gas specifically because you want to have a diversified portfolio. So part of what I think they're doing is they can both lower prices to hurt their brethren in OPEC who have been overproducing, while also bringing back more barrels to increase top-line revenue, which eventually will help them diversify away from energy and into all this other stuff. They really want to be a leader in AI. They're investing heavily in the U.S. sports market. We've seen it with LIV. We've seen them with trying to start soccer and other tennis leagues. I think the move here is less about market share and more about two goals, one in the short term, one in the long term, that are actually both different, but you can walk along the same yellow brick road and eventually get and accomplish both.
You bet. Let me go through 2 points here. If they were wanting to take market share from the Permian, because I want to make sure this is clear, if they were wanting to take market share from the Permian, it would be through Syria, because Syria has the light sweet compatible with the Permian oil, and the Shell and BP have won those contracts to do that because the Bank of London actually needs the oil revenue because it's facing its financial crisis. So for OPEC plus, not OPEC, you have Syria in there, and that's how that one's going to play in for that one. And OPEC's pursuit of market share through the strategic production heights aligns seamlessly with external pressures like sanctions, but we all know sanctions don't work.
Well, we know that for a fact. No, I completely agree. So I'm trying to look at who actually wrote this article here.
That was me.
Oh, you wrote this article? Well, I was going to say it's actually Clark Savage, and I disagree with Clark Savage.
I know him well.